Hey everyone, thank you so much for joining us for our webinar today to talk about deductible optimization, the subject everyone was looking forward to midday on a Thursday, the last week before Christmas. So thanks very much for attending. Our objective with this one is really to get something in short and sweet and add a ton of value. I know a lot of us are dealing with December 31st year end. Many more of us are dealing with a July 31st year end. It seems that no matter where we are in the calendar cycle, it's an important subject to dive into. So what I'm going to do, I'm joined by Adam Shier. Adam is now part of ClearRisk. He's a former risk manager, and he has a wealth of knowledge on the subject. He's been through the exercise many times himself, and has helped many others in different parts of his career. And we also have Jolene Ramsay joining us today, and she's going to help us understand her experience and where she came from with the City of Kawartha Lakes. Joanne is a risk and insurance officer with City of Kawartha Lakes, and a customer of ClearRisk who's graciously volunteered her time to help us provide value in this webinar. So thank you. I am going to provide some context and background. I know we do have some customers on viewing today who would be a little bit more familiar, but for those of us who are new or want a refresher, I'm going to give a quick background on what ClearRisk is, why we exist, what we do, and how we came to be. And then I'll dig into a little bit why we're here, and then I'll turn it over to Adam. Adam's going to walk us through the steps that he would take, recommendations to help us get to a place where we can optimize our deductible and consider what it means to raise that and the impacts that it can have on the organization. And then Jolene will join in the conversation, and we'll talk about the experiences that she had in her own organization. Okay, so ClearRisk. For anyone who doesn't know, and I'm sure there's a lot of people here who've heard me go through these exact points many times before, but we always start with, it's very important for us to understand why we exist and what we do. Even internally, when we address the entire company, it's one of the first things that we talk about so that we're always aligned in what our mission is whenever we're talking to someone outside the organization, existing customers, new customers, partners. It doesn't matter. These pieces are very important. We exist, the way we talk about why we exist is to optimize, to help our customers optimize their risk management programs. We use the term optimize because it doesn't matter if you're a public organization, a private organization, not-for-profit. In order to move that organization forward for growth in any way, shape, or form, it's a series of decisions. So every single decision that's made is in fact a risk. So what you really want is for the upside to outweigh the downside, and that's an optimal formula. And we think of that in almost everything that we do. And if we translate that to what we do in the most simple terms, we provide that tool that allows our customers to get to that place where they can consider their risk management program optimized. So in its simplest form, we keep it at that level in how we think of ourselves and what we do. ClearRisk is 15 years old this year, actually. Just a couple months back, we celebrated. And it was started by Craig Rowe, who many of you know and would have talked to many, many times. When Craig started ClearRisk, he was a risk manager at the City of St. John's in Newfoundland. And if you hear him talk about it, it's a pretty intimate story of how he came up with the idea to start a platform like ClearRisk. But he encountered some tough situations. There was a young woman who got backed over by a garbage truck. So there's a really intrinsic value there for what RMIS can do for an organization in terms of keeping people safe. And then, from a productivity perspective, streamlining processes that are manual, storing data from an aggregate perspective, These are things that Craig recognized very early that would significantly improve the program that he was working on. But at that time, these types of systems were not easily accessed. And then ClearRisk was born. So ideally, when you hear Craig talk about ClearRisk, it's very powerful. And it's very, very much about keeping people and assets safe and making organizations more successful. Our customers, for anyone who's interested in ClearRisk or interested in learning more, and for the customers who are on the call, I mean, everybody has the same things in common. We have a lot of assets, a lot of property assets for the most part, and we deal with the public. That combination means that we deal with higher claim volumes in a lot of other industries. And it also means we deal with a lot of liability claims, slip trips, and other types of property claims, et cetera. So that means that every one of us are facing similar problems right now. In general, even if there's no climate change or no hard market, property values increase over time. Property values increase over time. We are dealing with climate change. Weather events are happening more and more often. When we used to consider 1 in 100 storms that cause mega impact from a systemic perspective in geographic regions, these are now happening 1 in 10. And the 1 in 250 probabilities are increasing, and it's having a major impact on how the insurer place in the value chain and the reinsurer place in the value chain are looking at writing property policies. And on top of all that, we're still very much dealing with the hard market. So all of these things mean that our premiums are increasing. At the insurer level, capacity is decreasing. So municipalities, private organizations, we're all looking for ways to take on more risk so that we can consider raising the deductible to find or combat where we can save in premium. So getting into the rest of the program here, that's exactly where we want to go today. Adam is going to walk us through the process and steps and recommendations that he would have for the folks on the call to get to that place. Things like what do we need to know to set out to find an optimal deductible? Where is it safe to raise? Is there a step? Do we walk before we run, for example? So he's going to walk us through. And as I mentioned before, Jolene will join in the conversation and talk about her experience at the City of Kawartha Lakes. So thanks for hearing me out in our introduction. I'm available to anyone who wants to contact ClearRisk beyond this webinar. But right now, I'm going to turn it over to Adam.
Hi, thanks, Sean. Good morning, everyone, or good afternoon, sorry. So Sean mentioned I have worked in the municipal arena. Prior to that, I've worked as an insurance broker and an underwriter as well for 20 some odd years in spite of my youthful appearance. I've been in and around the industry for a long time. One of the most basic questions that comes up is, what's your deductible? How much of a deductible do you want? It's easy at home or on your personal car to make a decision about $1,000, whatever it might be. But when you get into a municipal portfolio and you start talking about hundreds of claims potentially in a year, that conversation becomes a little more difficult to have. And you need to be able to have an understanding of your claims history. So reporting that shows you 5 or 10 years of claims experience, segmented by the class of business, whether it's your casualty or your liability, with your excess and umbrella policies, whether it's your auto fleet, if it's transit, if it's cyber, it could be anything. Your property policy, Sean was talking earlier about property values. Having all of your claims summarized to be able to see, how many claims have we seen in the last, or what do we see in an annual average? Typically, we see 300 claims a year, whatever the number might be. Within that, how many claims are we settling below our deductible? How many claims are we settling above our deductible? And for the ones that do pierce the deductible threshold, by how much? So we need to understand how much is being spent on claims that do exceed the deductible. Typically, the vast majority of your claims are falling below your deductible. If they aren't, your insurance company is likely going to make some pretty harsh recommendations in the coming years, particularly given this hard market that I think will continue for the foreseeable future. So to be able to see the claims settled below deductible, be able to see them in excess of the deductible, and by how much. You may find that when you hit your deductible threshold, there may be almost nothing that's being settled close to the deductible. So maybe we carry $75,000 or $100,000. 95% of the claims are coming in, $40,000, $50,000, $60,000, $70,000, $80,000 a year. There may be a few that go past the deductible. There's going to be a couple that are right around, but the ones that do go past, we hand them off to the insurer, and we find those ones are coming in at 10 times the deductible amount. So an increase in the deductible isn't going to affect those really large losses. But if you find, that not a lot of activity is occurring above the deductible before it hits the really high numbers, it may be a worthwhile conversation to have with your insurer. We'd like some pricing options to see what would happen to the premium for deductible. Like we're at 75 today, we'd like to see a pricing option at 100. We'd like to see a pricing option at 150, 200, and 250, or whatever the numbers might be in your own experience there, whatever your current deductible is. That's on the liability side. On your auto fleet, maybe it's 10,000 today. We'd like to see what would happen if it was 25,000, because we find the vast majority of the claims are well below the deductible, or we aren't submitting claims because it's heavy equipment where there's pretty minimal damage anyways. The first party damages are pretty negligible. So to be able to have that conversation with your insurer, knowing your claims experience historically, you'll be able to then make an informed decision, or in the case of a municipality, probably make a recommendation to someone else. Here's a way to perhaps save some money. If we increase these deductibles to these levels, we're being offered a reduction of X number of dollars. In a hard market, it may not be that we are being offered a savings directly in terms of the traditional sense of a discount, but it may offset some of the increases that you're going to experience. So the premiums are going up anyways, but what we can do is offset some of that increase by increasing our deductible. And another scenario that's happening, and I think in a hard market, particularly the hard market we live in today, and certainly on the municipal portfolio, you're probably not going to be asked about your deductible as often. They're likely going to come to you with renewal terms where your deductibles have been increased. Whether you like it or not, this is what the insurer is stating they require. So that's an interesting one, because now we're not even having a conversation about what we might like to do and what the impact may be. Now we're having a conversation about the fact that we don't have a choice in this. This is what is being mandated or foisted onto us. We need to understand what the impact of that's going to be on our operations. We need to be able to budget for the increase in our deductible portion. We're going to pay more of these claims, whether we want to or not. So you need the same information. You need to understand the historical performance of your book, of your claims, your policies, to be able to deal with your finance department to understand what's likely an appropriate budget to deal with these extra costs as we go forward. I think additionally, some of what we're seeing right now is there may be lines of business where you may not be offered a renewal. That's a little trickier. It's not even now a conversation about a deductible. It's perhaps a conversation that we no longer have insurance on a particular aspect of our operations. And in that case, you're going to fund 100% of the cost of any claims. So again, understanding the claims trends around that aspect of your operations. We know we see typically this many claims in a year. We know they cost us typically X number of dollars per claim. We no longer have a policy that's going to respond to any of that. There is no more transfer of risk for those. So what do we think we realistically are going to incur as far as expenses in that regard? So all of those scenarios really come back to the same information, the same data set from your own policies, claims, experiences, et cetera. That's one of the tools that ClearRisk is able to offer. Does a very good job of giving you at a glance that information. You can certainly drill into it further to get more granular, but at the very least, being able to have a quick conversation around your deductibles. And of course, during the renewal process as well, it's helpful to have that information at hand when you're talking to your carriers. They don't have any insight into the claims you're dealing with below deductible. There may be assumptions made about your experience in your community based on things that insurers actually follow the news, shockingly enough. They are aware of things happening in your community that you may not have told them about. So having that information available to you again in that situation is also helpful, because you're able to at least support the position you're taking or refute some of the concerns that they may have brought forward. So yeah, thanks very much.
Thanks so much, Adam. Those comments are greatly appreciated. I can see Jolene nodding through half of it, like, mm-hmm. So I'll jump in and get Jolene to provide some commentary and shed some light on her experience, and then we can kind of converse, challenge each other a little bit to see what we can get out of the conversation.
Well, here at the City of Kawartha Lakes, we went through that exact process that Adam spoke about, both in 2011 and then again last year in 2021 with our, we actually went out to RFP for our insurance program. Again, we looked at historically, we took 10 years looking at what our claim payments were, what our costs were with respect to those claims year over year, and then we essentially put them into columns as far as the deductible options that were available to us at each time to determine, whether the cost, versus the premium savings made sense for the municipality. Fortunately, we were lucky enough; we weren't forced to a higher deductible either time, and we were able to see premium savings by increasing that deductible. Most recently, we engaged the services of an actuarial through our insurance broker, and had a full analysis done of both our premiums as well as our claims to see where we're sitting against the market, benchmarking us against other similar risks, and seeing where our premium that we're paying sits with the rest of the marketplace. And so we went through that exercise, which was very enlightening. It gave us answers that we already knew as far as our frequency of claims, our severity of claims, but certainly assisted us when we're looking at our deductibles. The actuarial, best practices is to have your deductible at picking up 50 to 70% of your claims payments. So right now we're sitting below that 50%. So the municipality is looking at again potentially increasing our deductible so that we're not just trading dollars with the insurance company. So that's our experience in the past with raising the deductibles. I think we have our approach with our insurer, with our broker, is really a partnership as well, and relying on their expertise and their advice. Looking at our municipality against others of similar size and exposure. So we really do rely on that expertise to guide us in our decision making as well. And again, just taking advantage of the services that are being offered by your broker, with respect to training and risk management, and and if they have actuarials or access to that can assist you with that analysis and get deep down into your claims to really, and knowing that history and that story that you can present to your insurer as well.
Sort of an obvious observation and question from someone who represents ClearRisk. But the one of the things that came up both from yourself, Jolene, and in Adam's chat was understanding the data. If we are going to take on a higher deductible, forced or by choice, we're taking on more risk in-house and we're handling more of the work in-house. Can we elaborate a tiny bit more on data required and what it means for that data to be easily accessible for this type of analysis? I mean, even if it's for your own risk management team or in partnership with the broker, having that information, what does that mean as it relates to this conversation?
Well, certainly more information is better, so that you can do a fulsome analysis over, and we keep saying 10 years, but that is really the guide. At this point, it's 10 years of your loss history. So we obviously are a ClearRisk client, and we do have all of our data, our reports through the system. And going through the actuarial exercise this year, we were able to pull that data from ground up. So from $1, our claims up to and including the claims that are being handled by the insurer. So that information is readily available from in the system. We were able to pull reports and pull out the exact data points that we wanted to include. And more information is always better. In addition to your claims data, we also had to, for the 10 years, we needed to note our number of employees, because if you're doing an analysis of your errors and omissions, you need to be able to provide your number of employees so they can see the progression of employment over the same period, your total insured values for your property, your number of autos, and again, your claims information. So there's more than just claims data. It's that underwriting piece as well that comes into play for an analysis. And we've even learned from going through the exercise now that the information that we provided is great, but we can always improve upon it. So even being able to break down, for instance, your auto claims. So not only having your auto class of business, but identifying if you have, at-fault claims or direct compensation claims, or is there a BI component, bodily injury, or an AB component, accident benefits component. So even taking the claims, because there is still a lot of, from what I understand in the exercise, there's still a lot of manual review. So being able to take that data, but also expand upon it will certainly help you as well. And I know from my past experience with ClearRisk that information is, the staff is great at being able to modify and change reports and pull that data out from, or, create a new data box or whatever it is, right? So it's when you don't have a system, it's much more difficult to gather that information and to be able to tell the complete story to an actuarial, to your broker, or to an underwriter. So that's our experience with the data and how we compile it.
Any additional comments, Adam, from your perspective?
Well, I think in terms of, if we're talking about a claim or claims in general, I mean, all of the documentation associated with a claim housed in one spot is helpful, but the financial data as well associated with that claim. So whether it's adjusting fees, indemnification, dollars you've paid out, legal fees that you've incurred, maybe you've paid for some sort of traffic analysis or a study that was done as part of the claim, you're still below your deductible. Having all of that information sort of in one place gives you a better understanding the true cost of the claim. You're going to probably find, in the absence of a central repository, data is going to be spread out throughout the organization. Some of the things that have been paid because you've had an invoice come through. There may be things that were paid in other departments. There may have been an invoice that was sent in directly through purchasing, whatever it might be. So you'll find you'll have holes in the data, which when you start talking about what's the true cost of a claim, you kind of can't do that without having it compiled in a central spot. I mean, it can even turn into situations where you may actually have spent more than your deductible without realizing it. When you compile the data, you may find that we've already exceeded the deductible threshold. Your insurer will not know that unless you go to them with the information. They'll review it, and then they'll, quite often they'll credit you back the difference. But that happens. So, it's difficult to overstate the importance of having the information. It's in a central repository and in real time. So, yeah. Thanks.
One of the objectives for this particular piece was to get us in and out in 30 minutes with some key takeaways. What I'll do, we're coming up on time. I'll ask Jolene or Adam if they have any final comments for us, and then I'll wrap us up.
Adam, do you want to go?
I think. There we go. Hi. Sorry. Technical difficulties. Yeah, I just, in terms of the, we're talking about the specific aspect of what you do in the process of dealing with your insurance policies. It's probably one of the more, I don't want to say basic to minimize the importance of it, but I think it's probably something that's taken for granted. I think that we typically assume the insurance company knows. They just know. We hand them the stuff and the claim goes away, and then we're in good stead. They're busy, and they can be a little bit disorganized as well. They've got adjusters and examiners involved, and there's multiple touch points where things can get away from them. So I think for every reason, being able to have an RMIS, a risk management information system there, to be able to work as a daily tool, all of this stuff, becomes a bigger conversation if you're going through the renewal process, or even if you're issuing any kind of an RFP, which is something municipalities are dealing with regularly. So having that data at your fingertips to be able to pull it up quickly, put it into different reporting formats. If you're having to report back to council or to your supervisors, there's reporting tools in there that make your life a lot easier than trying to figure out how to use a spreadsheet or an Excel document and put pivot tables into it and cross your fingers and hope that it's accurate. That work happens for you.
I would also add leaning on your broker, your insurer, for the advice. I think that is paramount to the relationship, and then seeing where your municipality is going. So yes, leaning on the broker. Adam touched on all the data, the system. I would say updating your loss histories with your broker as well, telling that story. If you've had even from previous carriers, if you've had some favorable settlements or claims that have been dismissed for whatever, telling that, making sure that information is getting through to your insurer as well, because that certainly will help with the renewal process. And it's not only premium savings that you have to consider when increasing your deductible. I know that is one of the major considerations, but you also have to look internally. And, do you have the resources, the staffing? Is your municipality proactive with respect to risk management and learning from claims will happen regardless? It's a matter of being able to manage those and putting systems in place to reduce the severity next time or the frequency going forward. So making sure that you're not only focused on premium savings, but you're focused internally as to can we handle and take on a larger deductible.
Well, thanks so much. I think that just about does it for the time that we allotted for today. Please, for anyone viewing, please, ClearRisk.com. you can reach out to any of us there and get in touch to continue this conversation. I know today we spent a lot of time talking about what it means to increase the deductible. One of the obvious questions that is begged beyond doing that is reserving at the insured level, and how do we get to a place where we can accurately predict what's required from a financial perspective in the event loss does happen when we do that. So stay tuned for another event in the new year where we'll transition from a deductible conversation and start looking at best practices for reserving. Thank you so much for joining us. Thank you so much to Jolene for giving us her time, and I'm sure we'll see Adam join us again in the future as one of our resident experts here at ClearRisk. Thanks so much. We'll sign off. Cheers.
Thank you.